All right, everybody, welcome to the credit building masterclass, right? Where you're going to learn everything you need to know on how to build your credit the ethical way, step by step, exactly how I did, right? Now, what is personal funding? It's basically you being able to apply for personal credit cards, personal loans, auto loans, right? All kinds of credit that has to do with your personal social, right? And what are those things good for? You can use those personal credit cards to start a new business, right? You can learn how to travel hack so that you can get free flights, free hotels, free rentals. You can learn how to manufacture spend, or you can already make, you could get reward points, cash back on money that you're already spending on the regular, right? And overall, and you could get a peace of mind, right? A lot of people they use their credit cards in different ways, right? One of their ways that they use it is just in case, right? Everything just in case, right? Now, what a fundable report should look like, right? So there's two different kinds of funding, right? There's people that apply for things blindly, and there's people that apply for, you know, funding, personal funding with a plan, right? Now, those that are throwing things at the wall and hope that it sticks, those are the people that are getting approved for very, very low limits, right? When you do it with a plan and you meet all the requirements that you see here, 680 plus credit score, no late payments on any of your accounts, right? No derogatories, no collections, no charge offs, at least 2 years of credit age, less than four hard inquiries across all four bureau sorry, all three bureaus, and utilization under 10%, right? And we're going to talk about utilization because a lot of people talk about how, oh, they should keep the utilization under a certain percentage. And I'm going to tell you the pros and cons to that, right? And accounts, 7 to 9 active primary accounts, right? And when I say primary accounts, I mean accounts that actually belong to you, not trade lines and, all those things that people mention to basically try to, take shortcuts and not have a sustainable credit report. What you'll be learning today is how to build a solid foundation the right way, exactly how you need it to be in order for you to get approved for maximum funding, which would be 50 to $100,000, right? And it could possibly be more because I've done it myself, where if I've gotten over $100,000 on a round of funding, where I've gotten a client of mine a round of funding over 100,000, right? Now, in order for you to build this solid foundation, one of the things that you need to do is add. A lot of people are going to have, they're going to be in different stages of this process, right? Many of us might have several negative accounts on our credit report. Some of us might not have any credit at all. We might not have any negative accounts on our credit report. Sometimes the name of the game is remove negatives and add positives, or it might just be build, right? Either way, whether you're in the stage where you need to build or you're in the stage where you have negative accounts that need to build, you still need to build, right? There's no way around it. And this is something that you cannot neglect. Adding a trade line or even two, even three is not gonna save you from possibly getting denied or not getting approved for what you want, right? So let's talk about different ways that we can build our credit. We're gonna talk about revolving accounts, secure cards, installment accounts, right? Unsecured loans, secured loans, mortgages, auto loans, and we're gonna talk about trade lines, right? We have to talk about trade lines because we need to properly inform you on trade lines, right? So to build out a credit report for funding, you want to have a mix of all these different kind of accounts, right? And that right there is a recipe for success right now. So let's go through it. So one of the credit builders that I suggest, right? There's many out there. I'm gonna give you, I think, my top five throughout this class, and I will talk about many others that I suggest, right? Because many of you guys might have seen my last credit building class. This is the 2026 version, right? So if you're wondering, this is recorded January 2nd, 2026. I think it's January 3rd. Yeah, it's the 3rd right now. But anyway, anyways, kickoff, right? So the way these accounts work is they help you build credit while saving money, right? Because what they do is you apply for a credit building account and they actually start reporting a credit card with a limit of either 2,500, depending on which plan you go with, right? And we're going to talk about the different plans that these credit builders offer, right? So they have a plan that is $25 a month and it will report a $2,500 limit on your credit report, right? And I'm going to tell you why we want that to be on our report, right? Because the reason that a lot of these people are getting approved for $200, $300 is because they don't have anything on their credit report for other lenders to compare, right? Comparable credit. That's how you get limits and access to limits, right? You want to put things on your credit report that have certain limits to make sure that when they go check your credit report, you don't get approved for anything less than that, right? So Kickoff is going to have two plans. They're going to have a $25 plan where they only report a $2,500 limit credit card to your report, or you can go with the $35 plan that they report a credit card worth $3,500, right? A $3,500 limit. Now, when it comes down to it, which one do you choose, right? I always tell everyone you want to think long term, right? You want to have these credit builders on your report for at least 6 months, right? And that's because you want to build payment history. You want these accounts to appear on your credit report and show positive payment history for at least 6 months. Show that you can handle this account for at least 6 months, right? And the way we're going to put it all together, make it look picture perfect, is by having several credit builders at the same time, right? Aging at the same time, building out at the same time. So that way you don't have just a slim credit report. You have a thick credit report. And I'm going to tell you why. Imagine going to okay, let's say you have one positive account on your credit report and you have a 750 but one positive account on your report versus somebody that has a 650 but let's say seven positive accounts on their credit report. Who do you think might get approved first? And it's like I tell everyone, it's not about your credit score. It's about your data points. What is on your credit report, right? So this is an account that you can use to add a nice limit account to your credit report, right? And it helps you build credit while saving money. And it doesn't give you a hard inquiry, doesn't do a credit check. It just approves you and starts a reporting to your report in the next 30 to 45 days. Now, then we have Self. The reason I have Kickoff first is because they have the plan $25 and then $35. Now, when you come over to Self, as you can see, they have bigger plans, right? And again, when it comes down to which one you'll be choosing, I want you to choose the one that you can afford, right? Because you got to think about it like this. The good thing about these accounts is, as you can see here, let's say you go with $25 a month for 24 months, you get back 520 and you're in total you're paying them 600. They're taking $80. Look, final cost $89. They're taking $89 in exchange to report an account on your credit report of 520 for 2 years. Now, you only need these accounts for 6 months because if you have all of these accounts on your credit report aging at the same time, after 6 months, we can finally do our first round of funding, right? So I know it says 24 months, I know you see 12 months, but realistically, we don't need them for that long. We're only going to have them until you finally get approved for your first couple credit cards, right? Now, back to which one you should choose. Choose the one that you can afford because you want to think long term, right? If you need five credit builders, right? Remember what it said in the beginning of the class. You want to have 5 to 7 primary accounts. Here, you're going to have five. If you're going to add five credit builders at the same time, you want to make sure that you plan ahead because let's say you add five and they're $35 each. That's 175 a month, I think, I believe. That's 175, let's say a month. You're gonna be paying 175 a month. That's gonna become a new bill every single month. Of course, yes, you get your money back, but for now it becomes a new bill. And when I say build, I want you guys to think about it like this. You're spending your money on these credit builders to build that solid foundation. You're trading that money and that time. You're trading that for access to this money, this 50 to $100,000, right? Now, back to choosing the ones that you can afford. You can go with the $48 or the 150 a month if you want to report a higher account limit on your report, right? So it all depends on where you're at. But either way, you can get the smallest one, you can get the medium builder as long as you get one, right? I don't want you to say, "Hey, I'm not going to get it because I can't afford the more expensive one." Um Go with the 25 if you have to, right? Now let's move on. So this is number 3, credit strong. Now the reason I have credit strong as number 3 is because the installment loans get even bigger, right? They're even bigger now. But overall, you get it. So far, this is number 3. They all work the same way. They report an account to your credit report and start reporting that payment history as long as you make positive payments every month. Now, two things. It's not just about you being able to afford these credit builders. You're gonna have to learn how to discipline yourself because now you're gonna go from possibly not managing so many accounts at the same time or possibly having to build that new habit with these new accounts, right? So we have to make sure that you can pay these accounts and not miss a payment because if you get a late payment on a credit builder, now you just make your credit repair process a bit more difficult, or you might add some work to your situation, or you might kind of like delay yourself, right? Because once you add these, we should make sure that we're able to afford them. We don't want to have a hiccup, get a late payment, because then imagine you having a credit builder on your report for 5 months and then you go ahead and get a late payment on it. It's like it almost goes out the window, right? So how will they appear on your credit report? So this is how they appear. So I did these credit builders in 2021, right? That lets you know, like, all right, there's some experience here, you know? There's some experience here. So as you can see, this one, I don't know what happened here, $10, but whatever. That one was added. We got Bridget. This is another one that I was using before. This is Self Lender back in 2021. This one here is I think this is Credit Strong, if I'm not mistaken. Right? Now, I had them for a while. It doesn't mean that you have to have them for this long, right? As you can see, I kept a positive payment history, right? And I used a bunch of the credit builders. I used a ton of them. So I can tell you firsthand which which are the do's and don'ts, right? Now, after you add 5 credit builders, remember it says you need 5 to 7 primary accounts. After you add 5 credit builders, and before we move on with the credit builders, let me show you this credit builder, right? Because this one right here, I like this one. So Me Ava, the reason I like Me Ava is because they have a plan where you can you can actually pay this off the entire year for $97, right? So if you're someone that doesn't want to worry about the credit builders and you want to lighten it up, or possibly you want to add 5, right? Let's say you want to add 5 and you want to go ahead and add a 6th one because you want your listen. I added so many accounts. I wanted my credit report to be on steroids, right? I wanted there to be no reason why I couldn't get that money I wanted, and that's why I got over 100,000 because I wasn't half stepping when it comes to this money. This money's not for everybody. You have to invest into yourself in order to get access to this money. This is not just a walk in the park, and like we're gonna tighten up. Let's tighten up, right? So back to this, $97 for the entire year. Beautiful. I love it. Right? Here, let me see how many I gave you guys. One, two, three. Okay, so kickoff, self, credit strong, right? You guys got me, Ava. This is another one. Kovo credit builder, right? This me, Ava's number four. This one is number five. Kovo, right? After Kovo, let me actually check because I have a message that I sent all of my clients. Let me see which ones I have there. My top five. Okay, here we go. Okay, here we go. Okay, actually, so I have Kickoff, Self, Me Ava, Kovo, and Credit Strong. So those are the top five, right? Let's continue. So now we have the secure credit cards, right? So secure credit cards, there's two that I want you to add. You can choose from this list. The reason why I choose these is because I know that these unsecure, right, in 6 to 12 months or 6 to 9 months. 12 months might be a bit rough. Let's say this is 9 months. So you can either go with the Navy Federal Secure Card, which I like. Okay, actually, you know what? Let's fix this because I see that these are together accidentally. Okay, that makes more sense. Okay, so we have the Navy Federal Secure Card, right? We have the Andrews Credit Union Secure Card. We have the Discover, the Capital One, and the Bank of America. Now, let's start off by talking about the Capital One. So the Capital One Secure Card, and I don't know why it's like this, but you can only put $200 into the secure card. And remember, we were talking about comparable credit. We don't want to have those low limits on our credit report. Now, if you're someone that has to start off with the $200 secure card from Capital One, do it. If you're someone that has a bigger plan, not even a bigger plan, sorry, that's the wrong way to put it. If you have to wait, because realistically when it comes to the secure cards, I tell people you want to put minimum $1,000, right? Because you want to have $1,000 in up accounts on your credit report, right? But if you have to go with the $200 Capital One secure card, do it. Let me tell you something. I did, right? I most definitely did. I like the Navy Federal one because you get to start building a relationship with the credit union, right? Another thing about these secure cards, Navy Federal, Discover, and Bank of America, you can actually deposit, let's say $500 into them. And as you go, you can actually go depositing more money into it to increase the limit, right? Which is a great advantage throughout this process, right? Now secure cards. These are cards that you can use to build your credit. The problem with these cards is that they approve everyone, but you need to make a deposit into the card, like into the account, so that they can hold this money as a collateral in case you default. Because, you know, the reason people get these cards is because they want to improve their credit. They want to build their credit. They might not have any, credibility, right? They don't have any reputation. So, in order for these banks to minimize their risk, with someone that's in your position, in your stage, they ask you to make a deposit as a collateral. So if you deposit 1,000, your limit will be 1,000. If you deposit 500, your limit will be 500, right? You deposit 100, your limit will be 100, which you better not, because this is the 800 club. This is not the 200 club. This is not the 100 club. This is the, you know what club this is. Let's continue. So $1,000 or better. Now, after the 6 to 9 to 12 months is up, what will happen is your card will become an unsecured credit card. They will return your deposit. They will upgrade the card to a unsecured card, and they will also more than likely, which I've always seen this happen. I'm not sure if I've never seen it happen. They will up, they will give you a limit increase on what you already had in the account and on the card. Right? So most of the time when your card becomes unsecured, you'll also get a limit increase. Right? Now let's continue. Auto loans. So auto loans are something that you can acquire even 3 months into the process. If you have these credit builders all attached to your account, you're building your credit. Now, the thing about the auto loans is that you're not going to be able to go from 0 to 100 real quick. You're going to have to start off small, right? You're going to have to get a reasonable auto loan, right? That can help you build auto history, right? Because the thing about the auto loans is that if you get an auto loan for 20,000, once that car is paid off, you want to go ahead and aim for a 40,000. You always want to double it. Overall, you always want to start somewhere and kind of increase the auto loans as you go throughout your credit journey. And like I said, if you have to add something small, remember, we want to plan ahead. We want this to be a long-term thing. If you got a plan, hey, look, I'm gonna add 5 credit builders. I'm gonna add 2 secure cards. I want to take it even further. I could do it. I want to invest into myself. I'm not scared, right? I know where this is gonna take me. I know this is worth it. I'm gonna have the credit builders, the secure cards. That small investment is gonna quadruple times 10. Why? Because that is the results of you building your credit report this way. Those are the results of you investing into yourself this way, right? If you have to add a Honda for 3 months, 6 months, whatever the case is, do it, right? Because you adding a Mercedes Benz off your first auto loan, it's not that it's not realistic, right? It is realistic, but you're gonna end up coming out of pocket way more. You're gonna be in a deal that they're gonna have to force to make happen, so it might not be the best deal for you. Let's think long term. Let's plan ahead. Honda, Mercedes, quick, right? Why? Because, look, now let me tell you why. Because the way you're going to be building your credit report, there's no one that is going to deny you. When I did my last round of funding, you think I got denied? I started not taking offers that they were getting thrown at me because I'm like, do I need this loan right now? And we're going to talk about the loans and things that I got. Let's continue. But remember, 5 credit builders, 2 secure cards, 1 auto loan. That's 8 accounts. Now we're on steroids. Now we're really building. We got 8 legs to stand on, right? Now we have the secure loans, right? Let's talk about the secure loans. This right here is a game changer. This right here is something that everyone is taking advantage of, right? This right here, this is for the big boys. You want to be Big Mama? You do one of these. You want to be Himothy? You do one of these. You don't hesitate. You don't hesitate when it comes to building relationships with credit unions and banks. When it comes to credit, it is all about relationships, right? So what are we doing? We're making sure that we paint them a picture perfect picture. It's going to be a picture perfect report card. How? By adding credit builders and showing positive payment history. How else? By adding 2 secure cards and showing positive payment history that I can handle 7 accounts. Because you're not just going to go from 0 credit cards to 10 credit cards without taking these steps, right? Also, you want to condition yourself to this. This is not for everybody. You don't just get access to $100,000 in credit cards and think that you're going to be moving. No, you have to discipline yourself. If you cannot pay off these balances on these credit cards, this will become a cancer in your life, right? The interest rates will eat you alive. That is not the point. Now, if you have an emergency, that's a different story. Either way, if you have me by your side, you're going to be a champion. My clients know it. And now that you're watching this video and if you don't know it yet, know that this is what we do. You see how we just broke this down and made it seem easy? It's because it is. When you go through this process, I want you to think about it the same way. This is easy. 5 credit builders, easy. 2 secure cards, easy. Now, everything at your own pace. Everything at your own pace. Don't overwhelm yourself. Don't say, oh my God, 5 credit builders. Do I have to start now? How fast do you want to get access to this money? You should start as soon as you're ready to, right? So now the secure cards. I don't know if you guys are familiar with the pledge loans, right? Amazing. Have to take advantage of this. This right here is one of the most important parts of this video. Like I said, you want to be Big Mama? You want to be him and Big Mama do pledge loans for $1,000 or better. Now, let's talk about how they work. So, my go-to for pledge loans is Navy Federal. Now, I want you to think about this. Remember, we spoke about the secure card with Navy Federal. Now, we're going to talk about the pledge loan with Navy Federal. Another thing, Navy Federal Navy Federal is a relationship-based credit union, right? And with that being said, they like it when you use their debit card. They like it when you have the checking account, the savings account, the direct deposit, right? They don't just go based off of your credit score. If you build your internal relationship with them by using their products, as far as the, like I said, the debit card, getting the direct deposits, getting the secure card, let's say, right? Remember what I said, credit is all about relationships. They will give you access to more capital, right? Now, this is how it works. I like to do this on Mondays because by Thursday, you'll have your money back. And look, check this out. So the way it works is just like secure cards. They take your money as a collateral, but the only difference between this and the secure card is that instead of your money being locked and trapped for 6 to 12 months, 6 to 9 months, you get your money back in 4 days, right? I'm going to say it one more time because I need you to understand that this is a cheat code. You get your money back in 4 days. You see these numbers over here? 15,000, 36,000. You know why I went ahead and did those kind of numbers? Because I had nothing to lose. Why? Because I said I need access to this money. I wasn't half stepping. Now remember, you can do it with $1,000. The reason I'm screaming at you right now is because you might have a little bag at home. You might have some money saved up. I want you to know that this is a risk-free process where you will get your money back in 4 days. All you have to do is do it exactly how I tell you right now, step by step. Pay attention. Check this out. And if you're sleeping, wake up. All right, wake up because we're not here to play. This right here is what's going to change everything, right? Monday, you call Navy Federal. And if you don't have a Navy Federal membership, there is another class available in the store that is gonna be how to build that relationship with Navy Federal, how to basically get into Navy Federal in 10 minutes without going through the hassle of everything that you see right now, needing a family member to give you access to sponsor you, you need to be in the military, all those things out the window. Go get the class. Backdoor method, Navy Federal. I think it's called The Power of the Membership, Navy Federal Edition. $47. You'll get access to Navy Federal in 10 minutes, right? So once you become a member of Navy Federal, you get access to their products. One of their products is the pledge loan, the secure loan. The way it works is you call Navy Federal on Monday, right? You let them know, hey, I want to apply for a pledge loan. They're going to ask you two important questions: for how much and for how long. Now, this is very simple, but these are two of the most important questions on this conversation. And guys, don't mention, well, let's get there first. Okay, how long? 24 months, right? 24 months is 2 years, right? And we're going to talk about why and how much. You want to do this for over $1,000. Why? Because of the comparable credit down the line, right? Don't do the pledge loan for anything less than $1,000 because, well, actually, I haven't got there yet, but Navy Federal is the house of high limits. They will give you access to capital. You just need to know how to optimize your chances of gaining access to this capital. And this is one of those ways. So don't fuck this up. Pay attention. Monday, hey, I want to apply for a pledge loan. Okay, for how much and for how long? $1,000. Let's say you're doing $1,000. Remember, minimum 1,000. How long? 24 months. Okay, where would you like for us to take the money from, right? Your money could be in either your checkings or your savings account already. You want to make sure that by the time you call, your money's in your bank account in either or account, right? Savings or checkings. Um, okay. Now, the third part, this is actually the most important part. The other two questions were important, but this one is the most important. You want to make sure that you mention when when they give you your money back, right? When they deposit your money back into your account, you want to make sure you tell them, I want it to get sent to my checkings account, not by check. You need to mention this, not by check, into my checkings account, right? The reason why is because when it's time for you to get reimbursed, the way you get this money back in 4 days is by telling them I want it back in my checkings account. If you tell them to mail it by check, you're gonna be waiting for that money in the mail. And it happened to me. It happened to me. I think it was with this 36,000. I'm wondering, like, oh my God, where's my money? Been 4 days. They said they send it by check. I was like, what the fuck? But I remember not mentioning this to them over the call. So by the time I did this one, I already had this one for a while. August 29th, 31st. So I had this one for a few months, but I can't really remember what happened there, right? I know that I got my money back to my checkings account. But on this phone call, I didn't mention it. So you want to make sure that you mention it. $1,000, 24 months, put my money back in my checkings account. Now check this out. They're gonna approve you. They approve everyone for the pledge loan. You're gonna sign the document that they're gonna send you by mail, or you're gonna sign it in your online banking. Now you're basically accepting the offer. You're accepting the loan. What's gonna happen is they're gonna take the $1,000 out of your bank account from whatever account is in. Then they're gonna deposit the a loan from them into your bank account. So basically, the 1,000 will come out, and then they'll deposit their quote unquote money into your bank account, $1,000. Tuesday, or as soon as you see the loan appear on your online banking, you're going to go ahead and pay off $967. If you do 2,000, you're gonna pay off $1,967. If you do 5,000, you're gonna do $4,967. If you do 10,000, you're gonna do $9,967. You're always gonna leave a $33 balance, right? Now what happens? Because basically, once the loan pops up, you're gonna pay off the loan 99%. You're gonna leave this $33 balance. You're making this payment on Tuesday. Wednesday, after midnight, Thursday, 3 a.m., your money is now deposited back into your bank account. So now you have this loan 99% paid off, right? Now, when it appears on your credit report, when it reports, this is how it appears. 99% paid off. Where's this photo? Look at this photo. One payment was made. $35,967. Reported balance $33. I now have a loan on my credit report, 99% paid off for $36,000. Right? Look at this one, $15,000. Reported balance $31. You know what I did? I put it on auto pay for $1 a month just to keep the loan open. Why? Because I got my money back, it's paid off, and it's $1 a month. Right? So here, look at the term. I don't know why it says 26 here, but 2 years paid off 99%, $33 balance, right? So check this out. Now you have five credit builders on your credit report. We haven't even got to the trade lines. You know how people be so quick to run to the trade lines? We're gonna get there though. But check this out. Five credit builders, two secure cards. Before you do the secure cards, if you're gonna do 1,000 each or 1,000 in one of them, do the pledge loan before so you can stretch that money. You do the pledge loan, get the money back, then you get the secure card. Now you're triple double. You just, we just hacking the system at that point. So look, five credit builders, two secure cards. Let's say you go with an auto loan. That's eight accounts. Let's say you do secure loan. That's wait, hold on. Five credit builders, two secure cards, one auto loan. That's eight. One secure loan. That's nine accounts. Remember, you need five to seven. That's minimum. But I just taught you how to get nine accounts, right? We're gonna have the people, you're gonna have some overachievers. They're gonna add everything the same day. This class is for you. You're gonna have people that want to take their time, but know exactly what they're doing, have a better grasp of their situation. This class is for you. You want to invest the minimum that you can and still get this done? This class is for you. Because I just taught you several ways to do it, right? So remember, you will get your money back Wednesday morning, no, Thursday morning, right? And then you put this on auto pay, $1 a month. Now, the new thing that's been happening with the pledge loan is that they will they will say you don't have another payment for 2 years. So your $33 might just be the balance for 2 years, right? Now let's continue. Rental primaries. Let's say you're someone that's been paying rent for some time. You can search your property up, your property management on these apps, on these websites, and if they appear, you can actually get an account reported for the rent that you pay every single month. Now, let's say you've been living there for 2 years already. That means that you can now have a 2-year-old backdated rental account on your credit report, right? So let's say that's possible. Now with these, I'm sure you might not. Hey, I haven't seen anyone add all three of them at the same time, but one of them will do, right? By this time, this will put you at like 10 accounts. Like I said, we have the overachievers. If you want to go big on big, go big on big. Why? Because there's nothing like investing this money into your credit report and how much it comes back, right? Imagine spending less than the credit builders, if you think about it, is man, listen. Hmm. Now the trade line and the authorized users. So the way the trade line work is you adopt the persons that owns the account, you adopt their credit history and age, right? So if they add you to their credit report, you're going to have the account on your credit report. Sorry, not if they add you to the credit report. If they add you to that specific credit card, you want to make sure that they don't have any late payments because if they add you and it comes up on your credit report, you now have an account with late payments, right? So overall, you want to make sure you get added to accounts with low utilization because remember, if they add you and they have a maxed out credit card, you now have a maxed out credit card on your credit report, right? The whole point of authorized users is to optimize your chances of getting higher approvals, right? Because let's say you added five credit builders, you added two secure cards. Let's say you have seven accounts with that. They aged 6 months, and you're like, okay, Sandy, I'm ready to go for funding, right? I have zero negatives on my credit report. I have all these credit builders aged out. I have these secure cards. I'm ready to go for funding. How can we boost our chances of getting more money? You want to add a trade line to your credit report, right? Because if you add a 10-year-old trade line to your credit report, you're now going to adopt a 10-year age history, right? And it helps you average out your credit age, right? So remember, if you're going to add trade lines, you want to do that at the end. That's not something you want to do in the beginning of your process because you don't want to go ahead and have negative accounts on your credit report and say, "Oh, can I buy?" You're gonna sprinkle sugar on shit. Trade lines do not work the same unless you have a clean credit report. You use them to boost your score, boost your chances of getting a higher approval. You don't want to put them on your credit report to just get an increase because remember, as you can see, by now is not about your score, right? It's about what is on your credit report. And that's why I'm talking to you about all these different kind of accounts to build that solid foundation. And remember, you do this one time. You build your credit one time and then you move on to getting approved for things. This is just a quick process in order for you to get to where you want to be. Like I said, there's no way to skip this. You cannot neglect this process, right? So, trade lines. You want to make sure you get to or not, totally up to you, at the end of your building out, right? At the end of these accounts aging, right before you want to go get these applications in, you get some trade lines. You want to get one with a really high limit so that you can now have a credit card on your credit report with a really high limit. And remember, back to comparable credit. Now they go based off of those limits, right? And then you want to have one with an extreme amount of age so that you can bring your age. Because let's say you have five credit builders, some secure cards. All of these accounts are now 6 months old. Now your credit history, your credit age is only 6 months old. You want to have at least, remember, you want to have at least 2 years of average age, right? So you want to go ahead and grab a trade line with age so that you can adopt that age that you need. So now look, with all those credit builders and the secure loans and all those positive payments, you're going to be over a 680. You're going to be on, like I said, this is not the formula for, this is the big boy formula. You're going to be past, oh, am I going to get put over a 700? Listen, this is the Himothy recipe. You're going to get put over a 700, like joking, like effortlessly. You're going to instantly get into the 700s. How about that? Follow my lead. If you're coachable, trust me, you're going to get what you want. This is the same formula that I followed to get access to almost $200,000 in personal credit, right? Stay with me. Okay, history, 2 years. So 680 plus, no late payments. You never heard us talk about late payments. If you need to build credit, because remember, sometimes people are going to be in the stage where they need to build credit. And if you're watching this right now and you're a client of mine, it's more than likely that you're building credit while getting the negatives removed, right? So we have to remove negatives while we build credit. Because imagine it takes us 6 months to remove all of your negatives. That's why you want to build this credit within those 6 months. Because let's say I hit you with, okay, we now have zero negative accounts. And then you're like, okay, so can I go for credit cards? And then I'm like, if you want to get approved for $300 because you never built out your personal report. That's why you have to be coachable. But like I said, everything at your own pace. As long as you don't neglect it, we get it done little by little, we'll get there. Right? So utilization under 10%, hard inquiries less than four. Out of all of those accounts that we mentioned, the only ones that should give you hard inquiries are, let's say if you go for the auto loan, or the secure cards will give you the hard inquiries, right? So we want less than four across all four bureaus. Okay, boom. Let's continue. Trade lines, the finish line. Okay. Once these accounts are at least 6 to 12 months old, we add 2 to 3 trade lines. One with high age, at least 15 years or more, and two with high limits. You could go with one and one if you want. And guys, I do have trade lines available as well. All you have to do is reach out to me and I'll gladly send you over the list. And I might have some of the most affordable trade lines that you'll ever come across. And you know me, I have the refund policies, if anything, the reassurance, the you could sleep good at night business, because you know how I get down. We're thinking long term. Remember, guys, everything is long term. It's 2026. We're thinking bigger than big, right? And let's take it there. Now, Once you have all those accounts with the age, you add your trade lines, then you go for your funding of choice, right? While building your credit, build relationships with credit unions and banks to make it easier for them to want to fund you, right? Like I was telling you, you want to build your relationship with Navy Federal throughout your building process, right? You want to get the checkings account. You want to let it season. Even if you're not using it, get the checkings account. Let it season. Let it just age there, right? Because when it's time for you to go get a product from them, a credit card, a loan, they're going to see that you've been a member for X amount of time. They're going to see that you didn't just become a member yesterday. You've been here for a while. Your credit report looks like it needs to look. And guess what? You're here to stay. So let's give you the money that you're here for. Right? Guys, this is the recipe. This is the recipe. You do not need anything else. This is not throwing things at the wall and hoping that it stick. No, this is it. You wanted to know how to build credit? Well, now you know. Follow these steps and believe me, you you're gonna see it for yourself. Once these accounts start populating on your report, how your score increases, how you get these different kind of messages that you haven't gotten from Credit Karma and Experian. Believe me, you're gonna cross that bridge. We all do. Right? Now, building relationships with different credit unions, right? Building relationships, getting checking accounts from traditional banks, the ones you're familiar with, but the more the merrier. Again, or you can just get Navy Federal. That one I highly suggest you get, right? You want to go ahead and have a Chase bank account, right? There's a couple that we should get. Overall, build the relationships with the credit unions because the traditional banks will still give you access to products even if you're not a member. To get access to the credit union products, you need to become a member, right? Now, this is what makes up your credit score, right? Payment history. Once you get one late payment, your score's gonna tank 80 to 100 points. Why? Because payment history is 35% of your credit score, right? It's 35% of your credit score. One late payment, boom, you just took a hit. That's why I said be on top of your shit. Be on top of those credit builders payments. Or I put it on auto pay. You better go double check if it's on auto pay because if not, they're going to automatically give you a late payment. And that is what we don't want. Now remember, I can remove your negative accounts, but I cannot remove your bad habits. You want high limits, you want business funding later down the road. Do not fuck around. Okay? Do not fuck around. Let's build the fuck out of this credit and let's take it there. You have what you need. You have the tools that you need. You have the credit builders. You have the secure cards. You have access to me. You have the support that you need from me. You need me to clarify anything in this video? Reach out to me. I would love to talk to you about what you saw. I want to make sure that you have what you need and you understand how this is going to help you, why you need it, and why it's worth it, right? So now that we know 35% of your credit score is payment history, the mix of the accounts is 10%, the length of the credit history, the age, remember that's why we're going to get the trade line, is 15% of your credit score. New credit. So you see these two, in my opinion, they go together because new credit and length of credit history. Let's say, for example, your oldest account is 6 months old. Once you get a new account, they average that 6 months with the 1 month, and now your age is 3 months, right? That's why you want to get an extremely old trade line because you don't want these two to be a problem. So let's pretend this is 25%. Accounts owned. The more accounts you have, the better, right? Look at this. Total accounts 18. So you see is green. Credit age 5 years and 10 months. You see is yellow. Medium impact because it's not enough age according to them, right? But let's continue. Recap. Kickoff, no inquiry. Self credit builder, no inquiry. Credit strong. Navy Federal pledge loan, 1,000 minimum. Secure cards, 1,000 minimum. Rental history, no inquiry, right? For the best funding, use two trade lines, one with high limit, one with an extreme amount of age. The more, the better. If you still need assistance building your credit or acquiring a Navy Federal membership or even getting your pledge loan, remember, this is what I'm here for. I'm here to help. I'm here to save you time, energy, and money. Let me know so that we can get you situated, right? Guys, let's build that credit.